Alright everyone, this is Marco Palmero, founder of Ulysses in Dubai. In this video, I want to discuss with you why acquisitions are the best way to grow a business after a certain level. And if you're watching this channel, you probably know that I talk a lot about acquisitions in the healthcare field, primarily in UAE and Middle East. But this video is going to be a bit more general and it's going to cover acquisitions worldwide, pretty much in any sector. Now, why is it that I believe acquisitions are by far the best way for a company to grow? Well, because they enable a business to tap into resources that are not their own. And when a company scales internally, fundamentally it is capped to the amount of effort, resources, and energy they can put into the business. And I don't care what a lot of people say about that. It is very challenging after a certain point to keep growing at the same level, unless you're Facebook, which is a very rare case. Many companies will reach a plateau in their internal growth after a certain point, which can be 7, 8, 9 figures, whatever. And at that moment, they need to adapt their growth strategy so that they can continue to grow at that rate, or maybe just accept the fact that they're plateauing and then keep the business as it is. That, of course, is totally up to you as business leader, business owner, or private investor. But the point I want to stress here is that internal growth is linear. Acquisitions are exponential in terms of growth that they can unlock. One of the concepts that a lot of people don't get is that acquisitions are not asking you to change anything you do in your business. As a matter of fact, they are a new channel that you integrate in your existing operations that unlock a new set of opportunities for you. And it is really beautiful what companies can achieve after they start to look at acquisitions in a certain matter, because fundamentally, they are not relying on their own efforts anymore, but they're relying on efforts of somebody else to build their own business. Now, what do I mean by that? Well, fundamentally, when you look at acquisitions, you identify a company that is matching your current growth in development ideas. You acquire these companies and then you integrate them into your own. So you're fundamentally benefiting from all this company has created over the years, and you don't know how many risks or how many years they put into this. You don't really know how much money it took them to get to that level. You're immediately acquiring that asset and you're benefiting from all they have created so far. And that really unlocks tremendous opportunities for businesses of all kinds, because you can keep doing what you're doing in your existing business while at the same time adding on to it, and the synergies you can generate afterwards become even more relevant. Because one thing is to buy two companies and keep them separate, which is something that you can absolutely do, but another concept is buying two companies and then integrating them together to achieve economies of scale and grow even faster, because the two kind of cross-pollinate each other. That is the ultimate game plan, and it is a strategy that has been used by corporates, by all the business giants of this world. If you look at how companies grew to a certain level, you will find out that all of them used acquisitions at certain points to propel their growth and tap into market share and opportunities that wouldn't be accessible to them if they were to grow everything internally. So the magic of acquisitions is really that you're turning your competition into cash. I always say this, you're fundamentally taking somebody who used to fight with you for customers and you're integrating them into your own business. Now, you might be less ruthless than that, but the point is still the same, right? You are leveraging revenue, clientele, technology, know-how of a certain company to build your own. And businesses do benefit a lot by doing so, because you can fundamentally take a business that is $10 million in revenue integrated with another that is generating 10 million, and you double your size in a matter of 5-6 months. Now, is that possible through internal growth procedures alone? Maybe, but it is not as easy as many people put it online. The truth is, acquisitions can unlock that growth much faster, and then it becomes an issue of integrating the two businesses, if that's what you're interested in doing. But the point is, why is it that so many companies don't consider acquisitions? Well, mostly because they think they need to know it all, and they need to know how to do things before they actually start the process. But the reality of it is, there are many companies that outsource this process completely, because, as I said, it is not something that changes anything you do in your current business. It just adds into it. And so you can hire or work with companies like ourselves that source, qualify, and pre-close the deal on your behalf, and just take care of the final decision that will ultimately pull the trigger on a specific deal. And that is, the ultimate leverage, really. It's the way to continue to grow at a pace that you desire, while at the same time avoiding being stressed out about your internal processes because they're not driving the revenue that you wanted them to drive. So I think that there's a lot of misconception around acquisitions. Many people believe that only big companies can afford acquisitions, while in reality, most of the acquisitions are happening in the SME space. Most deals are 7-8 figure deals, so $1 to $10 million in size, which gives an opening to basically any business to grow and expand through acquisitions. And in some cases, people would say, well, we're kind of capped in our market because there's no way we can conquer or gain market share. Everything is so crowded. Well, chances are they haven't looked at acquisitions, because that will be the natural solution for them. And I will actually give you an example to crystallize this idea. We used to talk with a business in the UAE in a healthcare field who wanted to grow the operations. And fundamentally what they were doing was providing clinical services, aesthetic services to the communities. Now, they thought the market was quite crowded, which it was indeed, and it still is. It is a very competitive environment here in the UAE from an aesthetic perspective. But what they thought was that there was no way they could actually grow their business rapidly. And the only way they could do that was by continuing doing the same thing that they were doing in the past. So finding customers through marketing, sales, partnerships, organic referrals and stuff like that. But as we mentioned to them, they could actually acquire market share by buying out a competitor, even in a crowded space like healthcare aesthetics. They suddenly realized that there was a completely untapped potential into this market, which was acquisitions. I mean, okay, I cannot conquer or I cannot gain market share by growing my business internally. That means that the market is crowded. That is totally fine. But it also means that every other business that is in the market is something that I can buy to grow my organization. And that's what they ultimately did. And it worked very, very well for them, because now they have 3-4 locations. So they have a chain of clinics as we speak. And the point is, in many established markets, it will be very hard for you to get market share overnight by just growing internally, unless you're a very disruptive technology that nobody is doing, but those are very rare cases. If you're in a regular industry, chances are you're going to have to compete against other people. And yes, if you're better than anybody else, you're going to get a lot more business. But after a certain point, even your high quality service is going to plateau. And that is the point where you really need to consider acquisitions as a growth channel, because they will unlock a whole set of opportunities that you can leverage to scale. You can buy basically any business in your industry, in your target geography, and keep growing until there are no more businesses to buy, which of course will never happen. But the point is, when you start making acquisitions, your kind of like cap becomes the market, because any competitor can be a potential acquisition. Now, of course, there are many other subjects that we can cover, like, is this guy going to be interested in selling and what have you, but those are more complex topics for a conversation. The point I want to stress in this video is that if you feel that your business is not growing as fast as it should, or if you're feeling like you're plateauing with your growth, then I seriously want you to look at acquisitions as a growth channel that can be added on to what you're currently doing. And again, you don't need to possess any technical expertise in this. You can work with people like us. As a matter of fact, there's going to be a link in the description. You can check it at Applied for a strategy session where we generally create a customized plan for people, and then see if there's a way we can help them with their acquisition strategy. But the point again is, despite you wanting to be involved with us or not, consider acquisitions as one of the key to your growth, because they're going to unlock a whole set of opportunities for your business in the near future. So this is pretty much it, and I'll see you in the next one.